Hello and welcome back to our Commodity Spotlight series. Each week, we will introduce you to a new commodity. Some will be familiar to you and others will not. Today, we are going to be discussing sugar futures, a trader's guide. Yes, sugar futures. This is not meant to be a replacement for in-depth research on sugar. This beginner's guide is meant to be a pathway for you to decide if trading sugar is right for you. I encourage you to do more research and in-depth analysis to see if adding sugar futures to your trading arsenal is the right path for you to take. First, we're going to touch upon a little of what sugar is and what moves it, and then we're going to get into more technical aspects of it. With that being said, let's get started. Sugar. We use it every day, whether it be in our coffee, the foods we eat, in rum production, as a biofuel, and even within some chemicals. These are just some of the many use cases for sugar. It is a geopolitical sensitive commodity, as well as having sensitivity to changes in food production and changes in food trends. The largest exporter of sugar in the world is Brazil, and they export roughly 36 million metric tons of sugar. There are three types of sugars out there. There's sugar number 11, which is the global benchmark. There's sugar number 16, which is for the US only. And then there's white sugar, which trades on ICU. Today, we're going to be focusing on sugar number 11. That is the global benchmark, and that is the most liquid. Sugar number 11 trades on ICUS. Each contract represents 112,000 pounds. It trades in tenths of a penny, and each tick is equivalent to $11.20. Just like other ICE markets, it is not a 23-hour, 6-day-a-week type of market, meaning COMEX, NYMEX, CME, CBOT, those markets trade 23 hours a day, 6 days a week during normal business hours. ICE markets do not trade like that when they close. So sugar closes on ICE at 1 p.m. Eastern time. That's it. The market is closed. There is no 6 o'clock open. There is no 7 o'clock. That's it. It's closed. It's closed until the following day. There is a pre-market at around 3 o'clock in the morning Eastern time, but really the liquidity starts around 8:10. 8:15, and it goes until 12:55, and then 1 o'clock the market closes. So just understand from a liquidity standpoint what time you should be looking at this. It does the most volume out of all the ICE commodities by far. It does about anywhere from 60,000 to about 75,000 contracts a day. It's by far the heaviest from a liquidity standpoint. The next nearest contract is cotton, which trades significantly less than that, in the 40s, even 30,000 at times. And then you start going down. Coffee, cocoa, orange juice. On a normal day, coffee's trading about 25, 30,000 contracts. Cocoa now is doing about 11, 12,000 contracts, 15,000 contracts. We will get more into that when we spotlight cocoa. And then obviously orange juice, which on a normal day is trading some 1,000 contracts, which we will be highlighting in a future video. That's some of the liquidity that you should be expecting in it. It is a $16 instrument. With that being said, you need to have your expectations in check for a $16 instrument. $16 instruments by nature are not going to be rip-roaring all over the place. They're $16. So 1% moves in the $16 instrument from a dollar perspective are not the same thing as a 1% move in, let's say, a $60 instrument or a $100 instrument or a $1,000 instrument, and etc. Point I'm trying to make is it doesn't move in huge price ranges that would hurt you. You have to know what you're doing. Don't misunderstand them. What I am saying, though, is it's one of those types of markets that when they're dead, they don't go anywhere. So you'll know pretty quickly whether or not sugar is for you or not. If you like more slower type of things, think, corn. It definitely has more characteristics of corn in terms of the way it trades than it does, let's say, oil or natural gas. Most commodities, they all pretty much trade characteristically the same. I would say natural gas, ags, being soybeans, wheat, corn, that's the characteristic that they have. Natural gas has a little bit more volatility, is more gappy. And I'm talking about just intraday, the way that it moves, they share those characteristics. So it's a little bit more of a slower paced instrument. I encourage you to do more research and see if sugar futures are for you. I hope you enjoyed this beginner's guide to trading futures in sugar. I look forward to seeing you on the next one. Take care.